Okay, class. When we do a sales transaction, the first thing that you need to remember is that there's always going to be 2 journal entries that are recorded every time you do a sales transaction. So let's take an example that we had cash sales for $1,800 and the cost of the merchandise that we paid for was $1,200. The very first journal entry that we would record would be a debit to cash for $1,800 and a credit to sales, the revenue account, for $1,800. Immediately following the sales transaction, you would then follow it up with a debit to cost of merchandise sold for $1,200 and a credit to merchandise inventory for $1,200. Remember that the cost of merchandise sold is the expense account that we use to convert the cost of the asset that we bought into an expense once we sell it. So every time you make a transaction that is for sales, you will do a sales transaction and then follow it up with the cost of merchandise sold transaction. First journal entry, second journal entry. The only thing that would change in this particular entry is if you received cash or accounts receivable. Those would be the only difference there.